Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multi-family real estate investor, Barri Griffiths. Now today we're joined by Doré. Hey Dan, how you doing, man?
I'm doing fantastic. Looking forward to this.
Me too. Me and Dan were talking beforehand, and it's going to be a very easy conversation and a fun one, no doubt about that. So I'm excited. It's going to be a lot of fun today. But before we kind of dive into the conversation, do you want to sort of introduce yourself and give people more an idea about who you are and what you've been kind of up to?
Yeah, so I'm from Ottawa, Canada. Born and raised here. I've always stayed here. I own real estate for over 20 years. Started off from essentially nothing, getting my first basement apartment and then leveraging off and over the years learning how to do that and get access to funds and so on. And then started a property management company so we could facilitate a lot more people getting involved in the real estate industry and the people essentially that didn't want to deal with the day-to-day stuff. So we started a management company to be able to facilitate that entry. And we've been doing that for probably about 17, 18 years. And we have, countless owners, and we've managed thousands of properties in Ottawa, and we continue to do so. So it's it's a quick snippet, and it's funny. I'll share a little story because you seem to be an easygoing guy. So
Yes.
when we started talking about this having this podcast, I said to my team, I said, I'm having a conversation with Barri Griffiths. Do you know who this guy is? So we chatted. I said I should challenge him to like a wrestling match. I said, I'm 5'8.5", 150 pounds, And they teased me. Said one guy on my team says like, well, what happens? He actually takes you on. I said, I'm pretty sure when I'm afraid I could run a lot faster.
Well, you're safe with Zoom anyway, but so you're completely
exactly.
safe.
So I felt really safe.
So you can challenge me all you want. Plus, I'm retired now anyway, so
exactly. Have fun. So
That's awesome. So how did you first get into? So you started investing before the property, then the property management company followed after that. But how did you first get into real estate? Because not everyone gets into real estate, right? I wish everyone would, or maybe I don't, because then it would be really competitive. But for their personal standpoint, I wish everyone could and would, because it's by progression. So for me at the beginning, when I was in my late teens, I still remember talking to my parents about buying my first house, and then I read a book, and I wasn't a big book reader, but I read a book called Rich Dad, Poor Dad by Robert Kiyosaki that I think most people in the real estate realm know. And I remember reading that book, and I'm like, I'm going to be buying a house, and it's going to be I'm actually aiming to have it be a liability the way I'm actually going to be setting up. I'll have to pay all out of my pocket. I'm like, how do I turn my first house into a real asset? Something that actually puts money in my pocket. And then I started exploring. I said, well, maybe I should get my first house and have, an apartment in it that supplements the income and so on. So that's how I started. My first house I bought had a basement apartment, had a good down payment, I had a little snow plowing company. I had my job, I had a rental income. And all of a sudden, I would tell my dad, I said, this is great. It's like living at home. I own a house and all the expenses are paid. So that's how it started. And it was interesting because it started off, as a humble, I just want to supplement my income so I can cover off my expenses. And then I realized at one point, I'm like, the income I'm generating from my rental property, my rental unit, is like the equivalent of an extra week of pay every month without doing much, essentially, because I own the asset. I live there. Obviously, I have to rent the unit. And I'm like, how do I do more of this, right? How do I do that? And then started learning about leveraging and using, my equity to resupplement other units. And then one became 2, 5, 10, 15, and just kept going. So it's a progression over time, but that at the beginning, there was no master plan per se. It was really, that'd be kind of neat. I wouldn't have to have any expenses. And then as we go on, then obviously today, then I'm, moving the needle a different direction, but it's, but yeah, that's how I got into it. But it sounds like you were sort of somewhat of an entrepreneur early on, right? Because you said when you bought that, you had your own snow plowing business. Is that what you had? Well, it was funny. So when I read that book, and we actually did a live event in December. Well, sorry, a virtual live event. I was in Toronto and did a live event, and the guest speaker was Robert Kiyosaki. So I actually have him on video asking him a question in front of like several thousand people, which is kind of neat. But in that book, it kind of triggered in me the whole process of, hang on a second, all these things that we purchase that actually take money out of our pockets, is how else do we do that? So at the time, I still remember when I read that book, I was still living with my parents, and I had a Mustang GT 5-liter that I love cars. And I'm like, yeah, but this car is actually a real liability. This isn't making money. So how do I do that? And then I traded, I bought a plow truck. So all of a sudden I had a vehicle to drive. And you guys don't need plow trucks in your area probably, but
not in Vegas.
Yeah. You love these things in the winter, but no. So essentially what I did is I bought a plow truck, and I got a couple of plowing contracts. So all of a sudden I had a vehicle that there was more income being generated than what it would cost me. So I had a vehicle that didn't cost me anything. So how do I take that into real estate? And then I bought the real estate. I'm like, that's pretty cool, right? So it's so that whole idea behind trying to figure out, it doesn't have to be, a lot of times people say it's about, they want to make a lot of money. Yeah, sometimes it's about keeping the money too, right? So if you can figure out a way where you get what you want without necessarily having the expenses or having it cut off, so have it cover it off, then so it kind of started with that, everything. So even with my rental properties, I'd buy a property, I try to figure out, like, what can I do to this property? Yeah, add a unit, can I add laundry? What can I do? How else do I tweak these buildings so that they're more, they perform more, their NOIs are higher? Like, how do we do that, right? So I'm constantly, like, I'm doing that now every day. It's yeah, those are my meetings for part of the day today.
Well, that's cool. That book is just, it's crazy, right? It's such a simple book. It's not really technical or anything like that, but for so many people, me included, it was just, when I read that book, it was just mind-blowing. It's a complete, when it hits you right anyway, a complete paradigm shift, right? A complete mental change that goes on in your brain, I feel like. And like you said, then you look at everything differently, right? You're just like, how can I turn this liability into an asset? How can I do the same thing that I'm doing, but maybe make money from it? How can I save money from this and that? And it's just amazing how it changes you, I think, for the better, I think,
Oh, I think and if everybody used that mindset, we probably wouldn't be in the financial problems that we're running into now as countries in the world. I mean, the mindset is very different. Sometimes just about, you got to take responsibility for what you're doing. But yeah, I that book, it's funny. I have a version here what's signed by Robert Kiyosaki.
Oh, wow.
I actually have it here in my office. Yeah.
That's pretty cool. That's
pretty
cool. What So what is your portfolio now? What your personal portfolio that you own yourself? How big is it?
Yeah, I have, it's worth probably about 10, 12, maybe 12 million or so.
Wow. Okay.
So it's still I say small because to me now, with the people I work with and I try to, to reach, I'm a very small player. So I aim to, to always grow to the next level. If you had told me that when I started, I would have said, oh my God, that's crazy. But now today it's like, okay, no, this, what's the next level? Because, I would hope that in the next several years, we're probably going to be closer to 50 million in real estate value with the projects that we're working on. So.
But that's great. Congratulations. Believe it or not, you're a big player. You say but I like that mindset, right? And that's a mindset thing as well. That's awesome. Like, it's like,
yeah. I always try to reach out to people who are way ahead of me, right?
Yeah. So, but with that, starting from that first house hack, essentially, is what you were doing before it was coined as a house hack, I'm sure. How have you gone from that to a 12 million portfolio? Kind of how have you managed? I'm sure time was involved with it and a lot of hard work, but how were you able to scale that so people can understand and maybe get their head around how you're able to, how someone gets to a 12 million portfolio, $12 million?
Yeah, it's it's always asking, what else can I do? Like, what else can I do? What do I need to learn? Why, and the reality is there's always people that are way beyond you, and there's always people that are way behind you. But what is that next step? What does it look like? What changes do I have to make? And a lot of it is a comfort thing. Like, I hit a point in my life where when I had kids at the beginning, we were chatting about our kids before, where I just got comfortable. So I coasted for several years, and it's not fun to do that. It's fun to always look at like, what else can I do? And like right now, I've never, like my foot's on the throttle like you wouldn't believe, because I really want to see what else can I do. I'm involved in it. So that's why it's going to take an exponential growth at this stage. But it's always asking, like, what else can I do? And don't compare it. You don't need to worry about the person who's, 10 years ahead of you. Like, what can I do now? What decision do I need to make? Who do I need to talk to? So it's been about that. So essentially when I had my first house and I had a rental property, and I kind of realized that, the income that was generated with not a lot of effort really, compared to working a day job. And then you realize that I said, but how does one buy a rental property where you already own the house and you put all your money into it? And then a friend said, oh, that's easy. You just leverage your house. I'm like, cool. I said, then I realized, what does that mean? What does it mean to leverage your house? And so I learned what that meant. So and it was interesting because it was so simple until it wasn't, because you read on it, you tell you how you got to, you get, comparable properties and you get yours appraised, and then you go to the bank and you refinance, you get your equity out, and then you use it against other properties and rinse and repeat. And I'm like, oh, that's so simple. I would get appraisal, I get it all done. I get to the bank and they say, no, we're not approving your loan. Why? Well, no, because your debt to coverage ratio is too high. Because now all of a sudden you're buying real estate, your obligations are not as high, are too high for your income. So you kind of learn the math now all of a sudden, how that gets presented. And then you realize, and it's funny, one of the things that I learned that I thought when I invested in real estate at the beginning is I would always struggle getting mortgages. And because I always drilled to get the best terms, the best price, the best everything, obviously, to keep the expenses low. And insurance companies, it was always tougher at the beginning. And for some reason, as I proved myself, it get easier. But as I grew, all of a sudden it's like, you're too big. So we only take part of your portfolio. And then all of a sudden you're like, really? Now I'm having to deal with 3-4 different insurance companies. I'm dealing with 6 different institutions for financing. Like, how does that make sense? But that's one of the things that if I would have bet against that at the beginning. I would have thought as I would prove myself, it would have been easier, but it was. So maybe that will change to the next level, because now we see it in a different light. Well, now we're getting solicited by financial institutions, which was not the case before. So it was interesting, but it's always about what is the next little step that I need to learn? Who do I need to talk to? How do I do it? And then you got to take action, right? You have to actually do it. Don't just read about it and think about it and hope that it's going to work. You actually physically have to do something. So yeah.
Well, congratulations on that success, man. And it seems like you've a lot of refinances, right? The kind of BRRRR method that everyone's coining now is kind of what you get, buy property, fix it up or whatever, create that value, and then take that money, equity out of that property and put it onto the next one. Is kind of seems like what you've been able to do.
Yeah, and it becomes essentially a no money down proposition, because you're using the same equity just being refinanced. So if you do the strategy properly, where you're able to bring up your income and reduce your expenses in every building and gain equity into it as you're paying it down, then obviously you'd be able to pull it down. Then that building runs on its own, and you can use the equity somewhere else. Whereas the counterproductive way of doing it, usually the most conservative people would say, no, I want to pay down the debt. But then you realize when you do that, your return on cash is very low. So you have to be leveraging in order to be able to get the ROI. But everybody's a bit different in that realm. But yeah.
And I think that's always it's always on, I don't know if you're on Bigger Pockets or whatever, but it's always a discussion. And most on Facebook and everywhere is leverage versus paying it off, right? And it's a constant debate whether one is different than the other. And my opinion always is it depends on you and a person, right? I've got a friend, I think he owns 10 properties here in Las Vegas, and he has very little low leverage. Most of them are paid off, some of them are 50%, but he's scared to death of leverage. He's scared to death of debt. It just scares him. He's from Bulgaria originally, and I think there was a hyperinflation there, and it kind of things got messed up there. So he's scared of that. So he wants to own it and not have any debt of it because he's scared of that. But I'm looking to leverage as much as I can where it makes sense, right? I'm not, not over leverage, but to the point where it makes sense, because you can get so much further, I think, and you can get there so much quicker.
And it was interesting on that note about leveraging. I had a podcast with a lady that did development in the Bahamas and all that about a month ago. And she asked me, she says, when we talked about leverage, she says, what is your line in the sand?
Yeah.
Because you can over leverage.
Yeah.
Right. And I said, that's a cool question to ask, right? Because not everybody understands that. You talk about leverage. Yeah, that's fine. So I said, for me, it's very simple. It needs to continue to cash flow. I won't leverage to a point where the building doesn't cash flow. Then all of a sudden I've taken out a loan, but now I'm negatively flowing. That doesn't make sense to me. And to me, I've maintained, the A lenders. I don't know if that's the way they're called in the States, but for us, the primary lenders, we don't go into secondary lending unless it was something that made you just had to happen. But for me, when I refinance, it's really about maintaining, the A lending type loans on them and making sure that the asset can actually cash flow on its own, because or else then I'm over leveraging, then I'm going in reverse. So that was my line in the sand to her. So I thought it was a pretty cool question to ask, because not a lot of people think that. They talk about leveraging, but not realizing that you can leverage to a point where, you can get all the money out. They can over leverage you, but then you got a second or third mortgage on it. And all of a sudden, you're paying into the operations every month. So you got to be careful with that. So.
Yeah, no, that is a great question, because it's true. We talk about leverage all the time, and it's like you said, what makes sense for that property, right? What is your comfort level? Where do you feel like you don't have so much leverage where you can't make that payment and the bank's going to take it away, essentially, right? And there's a lot of calculations, a lot of theory that goes into that, and it would be different for most people. But I think everyone has probably a slightly different level, a different line in the sand, right? If we all lined up, we'd have different levels everywhere. But it's important to understand that, and important that there is somewhere that leverage is great, but you can over leverage without a doubt, and it's important.
And it's not as fun.
Yeah, that's when you get into a lot of trouble. Ask people from 2008 and 2009
that's where it's not fun. Yeah,
how that went. Yeah, but it's cool. It's great that you also started your own property management company, right? Did that start out of necessity, or was that something that you wanted to get into?
It was interesting. When I hit a point in my life where I just knew I had to be in business on my own. I've been working for someone else, and I thoroughly enjoyed the experience, because I was working for a retail store, and it was a private retail store, and I would run the whole thing, do the accounting. You would help with the selling, the purchasing. So I enjoyed it thoroughly, but I knew I hit a point where I was hitting the ceiling, and I either had to accept to stay at that job or I could move on. And I decided I was going to move on, because and property management wasn't my first choice. I explored a lot of different things. And then a friend told me, says, you should start a property management company. And at first I'm like, I don't want to necessarily just cut grass and do snow. He said, no, I'm talking about maintenance. I'm talking about managing rental properties, right? And at that point, I already owned a few. So he says, just take your experience there. He says, most people will never get involved in real estate because they don't want to deal with the day-to-day stuff. So he said, you'd help a lot of people get involved just because you take on that task. I'm like, So it's interesting, because I hadn't thought of that. And I remember, and I'm not the type of person to make decisions on the fly, but we talked, I think it was a New Year's Eve party, and we're just chatting about business. And the next day I called him up. I said, you know what? I'm going to do that. He says, I know you will. I said, no, I'm not kidding. I'm going to do that. So again, it's like you asked before, like, how do you grow it? I was like, I don't know. Like, what do I need to do? Well, you need to talk to people, right? You need to talk to people. So my dad would actually help me. He would get all of the, in those years, the paper ads, everybody advertised their rental properties. So I would cold call everybody and ask them if I could help rent out their property. And then, 1 became 2, and then 2 became 10, and then 10, and all of a sudden, everybody sold, nothing again. And I'd start up, and then all of a sudden, then it get a bit of traction. So over the time, we're able to get more, and then it took a life of its own. And it's, but I'm really passionate. When I speak to people about this business, I always have to be careful, because I'm biased, number one. And number two, like, my experience has been very positive. But I say, and it's funny, I'm going to be releasing my first book in June, and the first chapter is called "Real Estate is Great If You Can Weather the Storm," and the reality, and it talks a bit about leveraging and over leveraging and so on. And I understand that. So for me, real estate is great, but it's a long-term play. So I'll get months, like I have one of my buildings right now that it flooded. last week. I've owned it for a dozen years, never had a flood, and the whole units in the basement had 6 inches of water, and we didn't know why. So we had to gut everything, but it is what it is. Like, I mean, it's I've had it for 12 years, never had any issues. Now that happens. Okay, well, fair enough. Let's fix it, move on, and then move on, right? But that happens. It'll set me back, 6 months, 8 months, 9 months. And I'll lose money likely this year, obviously. But over the long term, it'll keep appreciating and moving along. So, yeah.
I always say, anytime, it's a mindset shift as well in terms of real estate as well. You're going to have problems around if you understand that, but also if you understand it's better to have, these are good problems to have. You don't want to have any problem whatsoever. But the thing I always tell myself, anytime stuff goes wrong, is that I would rather have this problem and these things go wrong and be in real estate and have the option of having these problems than not be in real estate, right? They're good problems to have, right? And ideally we have no problems, but that's
You're
not
speaking my language. You don't even know how. I say that all the time. It's a good problem to have, and I resonate with 100% with what you just said.
Yeah, it's just a mindset shift. Yeah.
Yeah.
With property management is a tough business, and you know more than anyone else, right? I always think it's a thankless task. I'm always nice to my property managers as long as they're doing a good job, of course. Right? But it's a thankless job. People think you just collect rents every month and you get the 10%, and people are, I'm sure, is trying to beat you up over the fee. And it's like, I'll pay 10% over 8% every day if that means you're happy and that they're doing a good job or whatever, right? Because worry about, it's a stupid thing to worry about, in my opinion. Worry about how good they're going to be rather than what the fee is going to be. But just for people who don't understand, right, the 8%, 10%, whatever a property management company charges, what does that entail? It's more than just getting that money in every month, right? People pay rent and you get if there's $1,000 and you get $100 of that, right? Just by doing nothing. But it's way, way more than that. Just so that people can maybe grasp the concept of what goes into property management.
Yeah. So it's funny. The people we get the most respect from are the people who've done it themselves before, because they know what it is, right? No, it is a thankless job. We're very fortunate. We've always been, it may sound funny, but we've always been selective on the owners that we would deal with as well. There's kind of an interview process that happens with the owner as well. We want to make sure that we're on the same wavelength, because for us, in order for us to be able to do a good job, we need to be able to service the tenants properly. And if we can service the tenants properly, then generally that comes back to in spades for the property, because then you have less vacancy, people are not as rough on the units, and so on. So yes, when it comes to property management, it is in some cases a thankless job. You're on all the time. You never stop. There's always somebody that's on, and you're dealing with problems. It's like, so for example, like in my service, if I always tell them, I mean, when you have a problem, first of all, it's your opportunity to shine, because you want to be able to service people properly. But that's why we exist. If there's no problems, there'd be no reason to have us, right? And I had an owner many years ago said to me, Dan, we want to hire your company because we want to make sure we never have any problems. And I said, well, I have to correct you on that. I said, well, thank you for wanting to hire us, but just so we're clear, just because we're there doesn't mean there won't be any problems. We'll be dealing with the problems, because problems they're going to happen. It's just if you're in real estate long enough, you will get the flood, you will get appliances that break, you will get a tenant that doesn't pay you, you will get damage in the unit, you will get something that you weren't expecting to happens. It's to deal with that and have the resources to be able to be very quick to react to it, to serve the tenant, to make sure that you're in line with the legislation on what you can and cannot do. And in a property management company, generally, like for us, it's always about trying to get the best interest of the owner to make sure that we can keep the cash flow coming in. And if not, then try to remedy the issue as soon as possible so we can get cash to come back in, obviously. So it entails a lot of different things, as from lease ups generally. And obviously when we lease up, when we find tenants for units, we have a vested interest in finding people we feel are a good fit, because we'll be dealing with them after. Right. So when we go through that process of verifying income, credit, where they're coming from, references, identification, and so on, we're doing it in a sense that we also understand that if we bring the right people in, then generally it's an easier run going down the road. But units still break. and stuff happens, and you get all sorts of, it could be inclement weather, it could be, and us we get the extremes of the weather. So you get a minus 40 degrees Celsius in the winter, and everything's frozen, and then you get the summer where it's completely the opposite, where the air conditioners can't supply. So we get it both ways. So for us, we always have our hands full with stuff that happens. And but yeah, for people, again, people who respect us the most usually is the ones that have done it, or they understand, I don't want to deal with that. Getting that phone call from a tenant in the middle of the night, or somebody that doesn't pay and gives you excuses and so on. And we're able, it's much easier for us to be able to deal with that, because we deal with it from a business standpoint as opposed to a personal standpoint. So for us, it's business, right? So we, if a tenant has issues, obviously we're not in the business of just, evicting people just to evict them, but we understand that we have a process that we need to follow in order to minimize or mitigate any losses for the owner. And we're always, like, daily, there's always something happening to try to mitigate everything that's happening. So yeah, there's a lot of steps to it.
There is, right? There's no doubt about it. And a lot of times you're paying for them to collect rent, for them to handle the maintenance, for all this stuff, right? And what people forget is, as well, is what you guys have learned in terms of being able to lease stuff up, of being able to screen tenants, of being able to understand the legality, right? That's, you can get in if you manage properties yourself and you don't know the tenant landlord laws, you can get sued real quickly, and you're paying, that's, baked into the fee, right? And people, I think, forget all of this. They just see, they're getting their rent in and you guys are getting your cut, and that's it. You guys are not doing anything. And I think, even if you don't necessarily having to doing stuff with the maintenance side stuff, you're paying for the experience, you're paying for that understanding of the market, you're paying for all that knowledge, essentially. And I think people forget that. They just think that you guys are there to take all the money.
It's funny you talk about experience with setting up, get yourself in trouble. My first purpose-built rental property, in the first 30 days that I bought, for me, one of the tenants brought me to in Ontario, they call it a landlord and tenant board. So it's essentially the court system, because they said I did something incorrectly, and which I didn't think I did incorrectly. So I went in all confident, and I was about to lose. So I used that experience now to make sure my clients are protected. So yeah, can't do that.
Right, exactly. And that's what people, hopefully people listening to this will understand. Yeah. You talked earlier as well. I know we talked a lot about real estate, but that now you're a very active guy, right? And obviously you're a high energy person. I can tell that from the call, but you're a triathlete, right? You're
training to try to become one. Yes.
Wow. So how does the training look like that? That must be pretty intense, right? To be, what are the distances on a triathlon? It's obviously biking, swimming, running.
That's right. So the one that I was registered for is, it's called the 70.3 Ironman. So it's a, I forget now. It's now that my triathlete buddies are gonna want to hit me over the head, but I forget exactly what the swim is.
Yeah.
I think it's a 2-kilometer swim, and it's a 90-kilometer bike followed by a half marathon, all one after the other. And so I was in the process of training for my first one last year, but then COVID hit, and unfortunately they closed all the pools and all that. So I haven't been in the pool to be able to train, because here in Canada in January we don't get to go out. We have to go indoors. So no, so I haven't been in the pool in over a year. So, but no, the running and the biking, obviously the biking is done in inside, but actually I'll take my bike out for the first time this season tomorrow, because it's nice outside. So it's, but yeah, so it's a fun distance. I haven't done it yet, but I'm training. So again, we talked about how do you get to the next level? For me, well, for training, this was the next thing that was scaring me, because the last thing I did was a marathon, just running. And I'm like, hey, what would be the next step? I would do a triathlon, and I've never done an open water swim, and and then the bike and all that. So yeah, so always trying to hit the next level.
Yeah, I love that, and I love how you and that's a great piece of advice for anyone in terms of a mindset thing. Is just what's that next step, right? It's easy to look at this huge picture of, if you own one unit and you want to get to 1,000 unit, right? Well, how do you get to the next one? Well, is it getting to 10 units or maybe getting to 20 units, right? Because you can't, without getting to 20 units, you'll never get to 1,000 units, right? And if you look at the 1,000 units, you'll never get to 10 units, which will never get you to there. So it's that little step, getting that little bit more every year, better every week, every month, every day, every minute. You know, it's getting that little bit further, and it just adds up over time, right?
Yeah, sometimes it's what they call the 2 millimeter shift, right? Just keep chipping away, and then all of a sudden it yields. And I don't know of any other way to do it than to do it like that, right? So it's always trying to just the next step. So in everything that we do, right? So
yeah,
man.
And
I'm sure you're the same, because a guy like you with your background, there's no way you get to this level without some craziness like that all the time.
Yeah, craziness. I think you hit on it. That's anything else. Craziness more than anything else. I think.
I love it. I love it.
Matt, this is a fun conversation. Really, really enjoyed this conversation. But as it's getting time to wrap up, it's time to get to the part of the show where I ask wrestling-related real estate questions, and this is going to be fun with you, no doubt about that. And the first question is, what would your wrestling name be?
Yeah, wrestling name. I'd be called Dan the Man.
Dan actually signed up, so I've got a scheduling link that people sign up. He signed up as Dan the Man. I was like, all right, this is my kind of guest. This is awesome. This is going brilliant. So every wrestler has a special move. What is your special move in real estate?
Yeah, I think my special move is I just never stop. I just don't stop. It's we run into challenges. I run into challenges constantly. And I'm like, all right, we just, there's one way to make sure not to fail, and it's just not to stop. Yeah. And to me, that's there's no special talent there. It's just don't stop. Just keep pushing. So to me, if you're trying to tap me out, I'd probably be that guy that just flopped after. I'm half dead or 3/4 dead, but I'm still moving.
Yeah. I'd have to break your arm to get, and you wouldn't tap probably. That's the type of. What's been the biggest body slam you've taken in your real estate career?
I don't know that I've taken any body slams to be quite honest with you. But I would think that the biggest challenge was the fact that I would not allow myself to really push myself outside the boundaries of my comfort zone. So I would always set goals that were very achievable. And I would always surpass them. And then there was always, you never get really outside. You get a bit out of it, but never completely out of it. So if I had used the mindset that I have now, chances are I'd be substantially, bigger in many ways than what I have. But, there's always this little fear of being, and it's not uncomfortable, but uncomfortable experiences and leveraging a bit more, or trying out, this building. Oh my gosh, there's, X amount of units. And I would let that intimidate me. So that would probably be, because I've never really had a setback, and chances are the reason why I've never really had a big setback is because I've always been fairly cautious in my approach. So no real body slams, apart from just maybe not getting close to the guy that's gonna body slam me.
That's impressive over a long period of time to not have any body slams. So credit to you for that. But so was there a moment, and it seems like you kind of have alluded to it, was there a moment that you were standing on the top rope getting ready to jump, but you were too scared? What was it, and how did you overcome it?
Yeah, I think I experienced that regularly, to be honest. With a lot of the stuff that I do, where I'm about to look at it, like setting up for the triathlon, or right now, I've signed a partnership, and we're going to be building 200 purpose-built rental properties from scratch. Those are the types of stuff that I've been looking at for years, and like, oh my gosh, I don't know if I want to go there, right? And then all of a sudden you just keep chipping away. What's the next little thing I can do? Who's this person I need to talk to? What question do I need to ask? How would that work? Where would the money come from? What would a cash flow look like? What would pro forma? What if I run out of money? Where am I going to find the money? Who would potentially, participate in these types of projects? So, and then all of a sudden, then the rope, all of a sudden you just jump. And so for me, I never do it without fully, embracing the fact that I got to think about what I'm doing. I'm not just going to jump. It's just not in my personality to do so, but I will always be looking for that next little thing that I can do to try to get myself to the next level. And I think that would be my big off the road, and then eventually I'll go.
That's awesome. No, but it's great, right? It's important that we all jump, because that's where growth is, and that's where not the future, but getting better and improving ourselves, and successes as well, I think, is in that discomfort as well. So, man, thanks.
Absolutely.
Yeah. Man, this has been fun. Thank you so much for taking the time. I really appreciate it. High energy. You're a fun guy to interview, no doubt about that. But before we go, if people want to reach out and get in touch with you, or if they want to find out about your property management, or if they want to find out about anything that you have got going on, how can they do so?
Yeah, probably the easiest way is probably through my LinkedIn, account, Dan Doré, and it's Doré spelled with a D-O-R-E. And I'm in LinkedIn, so I'm pretty active there every day. And then generally we have the Doré Rentals website, we have the Dore-Property Management website, we have the Doré Capital Group website, and they speak to different audiences. Rentals obviously for tenants, property management for third party, and capital for people who want to invest in larger endeavors. So yeah, those would be the channels to look for.
Very cool. Well, thank you so much, man. Have an awesome rest of your day out there in Ottawa.
Yes, thank you. At least hopefully we're getting a bit closer to temperature that you are.
Well, it's in the 90s. It's in the 90s here today, so good luck with that.
Yeah, we're very far from that.
Yeah.